are two. What are the barriers that impede the growth of cyber insurance market? For example, in the UK, if I give you an example, uh, if the pet insurance market is about £1 billion, whereas the cyber insurance market is about $100 million, which is almost 1/10. So do people care more about their pets than they care about their data? I don't know. The second is, what are the drivers that may propel cyber market growth? The research also aims to order them and rank them. And currently, to the best of my knowledge, there is no single paper available that prioritize the drivers in a structured manner. Multiple papers are available in the cyber insurance market challenges, listing barriers and drivers, maybe a 10 to 20 papers. But nevertheless, to deeply analyze the challenges and map the challenges with the drivers is something that is currently absent. I have adopted the Fuzzy Topsis method. I'll speak about the Fuzzy Topsis. And the outcome of the research is actually to rank the priority items in terms of what should be done to improve this market. Uh, World Economic Forum has been listing cyber risk as one of the top risks in the last 5 years. And the predicted cost of cyber crimes is predicted to touch around 11.5 trillion in 2023 itself, and maybe around 2027, it's about $23 trillion. We do get to see WhatsApp calls and the cyber frauds that happen in our day-to-day lives on a daily basis. Cyber insurance market is expected to touch around 14.8 billion, primarily because the cyber insurance market, as somebody wrote, in its teenage, because cyber insurance started only in the last few years, and it's not as huge or as old as marine insurance market, which is about 700 plus years old. On the other hand, the auto insurance volumes, if you take the car insurance, by auto insurance, I mean the car insurance, which is projected to reach around $390 billion in 2021, compared to the volume of $261 billion in 2021. If you look at the properties and insurance market, which consists of all types of insurance, cyber insurance is just 1% of the properties and casualty market. So I did a literature review, considered various search terms in terms of cyber insurance challenges, and studied various papers, and then parked all the barriers or the limiting factors that will impede the growth. I grouped the barriers into different categories: the industry barriers, the premium barriers, or the coverage barriers, or the claims barriers, or the customers barriers, and cyber risk barriers. What do we really mean by barriers? The application process, whether the application that somebody files for getting a policy, does it capture sufficient information in order for the company to assess the risk and determine the premium? Sometimes high premium costs also deter people from buying the policies. There is a lot of uncertainty in coverages. I'll not be able to cover every barrier, so I'm just walking across all the barriers, whatever I can, given the limited time. In case of terrorism insurance, government funds the insurance companies. Even in India, there is a 2% cess collected on various insurance policies, and that pool is collected for the purpose of reimbursing people in the event of an act of terrorism. There are not many models available in cyber risk currently due to the recent development in cyber insurance. If you take a health insurance or auto insurance, there are a lot of actuarial data available that will help companies determine the premium, companies determine the risk coverage, and companies sell the policies in a much easier manner. Sadly, no such information is available for cyber insurance. So what are the real drivers? Before I go to the drivers, I just want to very quickly talk about the Fuzzy Topsis model. Let me explain this model in a very simple term. Let's take you are buying a car. Price of the car alone is not going to be the determinant factor for buying the car. You're going to have multiple factors, say the safety of the car, your affordability, your fuel efficiency, the capacity of the car, whether it's a 5-seater or a 7-seater. So many other factors are there that determine the decision. So when all these decisions are not necessarily numerically expressible, so for example, the price of the car you could say as say $20,000 or 20, 40 lakhs, 50 lakhs, whatever it is, you could put a number to it. But in terms of safety or in terms of your affordability, in terms of your liking for the car, in terms of the brand value for the car, they are not explicitly expressed in monetary values or in numerical values. So you take into account various factors which are not necessarily numbers, and then you try to have a decision making in that kind of an uncertain situation. It's a very well accepted model used in various fields, including management, finance, and other fields. And you need to ask different individuals, like a survey, to give ratings to the different barriers and connect it with the drivers to see which driver is the most efficient thing to eliminate the barrier. So these barriers and drivers have been identified from various papers. So every barrier has a source, or every solution has a source linkable to another research paper that has been done in the past. So this research is actually mapping all the barriers to the drivers to make sure that the cyber insurance market gets propelled in terms of the growth. Cyber insurance market continues to bleed losses. Some of the companies, if they collect $100 as premium, their loss is they spend about $130 to manage the policy. It's compared to other insurance lines, take marine or take fire insurance or household insurance. This loss ratio, what is called as a loss ratio, is really huge, and companies are really struggling to manage it. So the aim of this paper is actually to rank the barriers with the solutions to make sure that the market really enters into a growth trajectory. So making cyber insurance mandatory and government sharing losses like terrorism insurance has emerged as the number one and the number two drivers that can propel cyber insurance growth. And a lot of things is happening on that front. US is trying to come up with various laws that make sure that companies get cyber insurance in one form or the other. In India, the market is about 350 crores, and it's a very, very nascent market. A lot of multinational companies buy the policies. In fact, HDFC Ergo and one more company, Bajaj Alliance, have also got policies for individuals. But nevertheless, the market is really struggling, and this research actually contributes in terms of what are the factors that can propel the growth and eliminate the barriers. Thank you.
Any questions?
Yeah, I'm happy to answer any questions.
I have one question, sir.
Yeah.
For ransomware kind of attacks, is cyber insurance possible?
It is possible, but a lot of limitation is there. Now, the companies are actually restricting the cover in terms of whatever they can provide. And there is a theory that insurance companies propel ransomware. Right?
Yeah, that's right. That's right. That's why I asked
that is
you.
another theory. And there is a company called Aon Insurance in France which stopped providing ransomware cover. The third theory is that the hackers log into the hackers hack into the cyber insurance companies, try to understand who have got the policies, and then try to target those companies who have got policies. So it's a very rhetorical question and a lot of problematic area.
Thank you, sir. Thanks for the clarification.
Thank you.
Thank you. So we will move on to our next presenter, Ms. Amla. And the title of the presentation is Digital Forensic Analysis of Vehicle Tracking System.